ever wish that each time you trade, you are almost you are correct on the right direction most of the time? If that is your goal, you need to trade the golden timing. So the goal of this A plus setup trading plan is to help the confident trader to invest and trade the golden timing all the time so that it can become profitable, so that it can turn profitable. Because profitability is the fact that if when you started trading, you bought a course, let us say 500,000 francs CFA, which is roughly 1,000 euro, average, almost 1,000 euro, and you bought maybe um, you invest in your capital, you invest in the internet connection. Those are your expenses. So profitability means that the gains that you have in trading are above of your expenses. First of all, you need to arrive arrive at the same level of your expenses. Then, in terms of gains, then you will have profitability above that. So that's what we call profitability. But to do that, you need to trade the golden timing. So the goal of this plan is for you is to show you how to trade the golden timing. What is the golden timing? The golden timing is simply the fact that this is a description of the golden timing. The golden timing is simply the fact that you need to basically uh, look at when Kijun cross above SSB, right? Kijun must cross above SSB. That is for the buy. And you sell when Kijun cross below SSB. That's for the sell, right? So what I mean by that is that you come here on the on the asset. Let me show you the golden timing. Just right here. So do you see Kijun is this green line, right? Do you see when the green line came just here, right here? So you see this is a green line coming down, and then when it crosses the black line at this level, this is the golden timing. From this point, you can then be taking setups to the upside. Like this is Tenkan setup, this is another Tenkan setup. If I go on 15 minutes, for example, this is the golden timing for the sell. When Kijun cross below SSB, you can then be taking Tenkan setups like this and sell and be selling. You'll be selling like this. That's the golden timing. After the golden timing, you can take setups now and be confident. That's what a confident trader looks like. Looks the market to trade. The trader looks in the market to trade. So that's the golden timing. So there is four time frame. You know that we enter in 1 minute, and then we enter in 1 minute, but we look at the higher time frame for confirmation, right? For validation before we enter. So we have golden combination. Like you can combine 5 minute and 15-minute golden timing before going and take a sell. Let us say, look for example, let us take this this uptrend. What you need to understand is that first of all, about the golden timing is that this is the point where SSB and Kijun cross toward the upside, right? This is the point. In this place, Kijun was still below SSB, below the black line till here. Arrive here, Kijun just went above SSB. That's a very important moment. And let me tell you why it is a very important moment. The golden timing, why am I calling that the golden timing, and why am I showing you that just right now? It is because you need to come back to the mechanics. It's all about the mechanics of trading. Trading is not something that is virtual. Trading is just a digital mechanics of something that mechanics of something that's happened in the physical market, in the physical life, a life that you can touch. So we have here, for example, the physical market, right? PH, where we can sell tomatoes, corn, cocoa, cars. This is the physical market, right? For things that we can touch with our hand. And then at this level, we have the digital market, where we have a screen and a graph like this that plots the price, the price movement. This is the digital market, right? And this is us traders who are doing trading. So what's happened in the digital market, that is the financial market. The digital market just represents 100% the physical market. So it's just a translation of what's happening in the physical market. If we are buying more tomatoes, the price, the demand will increase, the price will rise. And the tomatoes will be less in the market, and then the price will start rising. That's what happened in the digital equal to the physical, right? That's the mechanics. And what creates this demand and all this high demand and low offer in the physical market? Remember about the mechanics, how the mechanics work. Here is the mechanics. In the first video of this course, one of the first video of this course, I told you that the economic news, the news create the volume, right? That's how it works. News create volume in the real life. So news create volume. Volume now create price, right? Volume now create price. And price creates what? Indicators. Indicators. And what is an indicator? An indicator is just a virtual assistant. This one is just a virtual assistant. For those who work like on Fiverr as a freelancer or a secretary, an indicator is just a secretary that help you display what the news is saying, what the physical market is saying, like in 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 a in a more simpler way, rather than you using a dry price, right, to analyze the chart. You use indicator just as an assistant, as a secretary. It's like you are the small brother in the house and you have a big sister. When your big sister wants something to in a market and she doesn't want to go out, she will send the little brother, right? That go and buy us tomato and some ingredient for the sauce that I will cook soon. You are working like an assistant for for your elder sister, like a physical assistant. So you are a physical assistant, right? So and you go and buy those things in the market, but indicator are virtual assistant. Okay, it just represent what is happening in the physical market. Is all of them are real world market, right? But there is a physical part and a digital part. So what happened from this is that um, since indicator just represent what is happening in terms of volume, how the demand and the offer in the traditional economic work, indicator are just displaying it. We have then two type of line. We have first of all the Kijun line, that is the green line like this, and then we have the SSB line like this. When they cross each other, what is the meaning of this? What is the meaning of this when they cross each other? Remember about, do you remember about the fact that when I explained to you that this economic news is the starting point of all of this trading? The story about the mechanics of trading start with economic news. Economic news are impacted by the data release, right? Like inflation, interest rate, NFP, CPI, the data release. So, as I told you, we don't have data we as a trader, as stay-at-home trader, we don't have data to read. So there are people like the Fed president, the president of the European Central Bank, Bank of Japan, and all of those big banks who have data. When they read data, it impacts the physical market. And what the indicator shows is just show you how it has been impacted the physical market. And then we also have conflict that affect the physical market. What type of conflict? Remember about the first video when I said I was talking about those dogs, those street dogs in the Yaoundé town who didn't have water to drink in Yaoundé, right? they then decided to go and burst water bottle of the Funisa, the provider of the water provider, and drink all of that water. That affect the market, and the moving average started bending down like this. So this is something that is this is something that's happened in the physical life, right? And then you see you have street dogs like this. You have street dogs like this, right? Those are street dogs like this who come and affect the physical market at this level. But what is showing in the graphic is the result of the impact of it on the product delivery and the price. You see that the price were going down because the volume are going down too. And the indicator were just indicating. That's what's happening here with Ishimoku. Tenkan, Kijun, and SSB are just indicating what is happening in the physical life. So the economic news, when the release is in the radio, those the water provider of the town said that street dogs come and burst all of our water, right, and drink all. They just made a bad move to us, and they release it in the radio. When they release it in the radio, everybody knew that they will not have water, right? And that's how the graphic started displaying for this company that deliver water. That's the same thing that is happening in trading. Kijun and SSB are just displaying exactly what is happening in the market. That's why I call this the golden timing. Because when you saw during the conflict in Yaoundé town, the water conflict in the Yaoundé town, you saw the moving average bending to the downside, bending like this. And when and with trading, you are not forced to know exactly what is happening in the physical life. You can, for your beginnings, before you start going and read all of the newspaper, you can actually understand that the bendings of this is just linked to. So the reason why I call this the golden cross is because the bending of this moving average to the downside just represent a very impactful event in the physical life. So if you don't know exactly, and don't have time to go and read all of the newspaper, all of the reports, and you can actually just know that the number one report that you need to read is this digital cross, digital golden cross. That's the number one report that you need to read before going and confirm it with the physical paper, newspaper. So that's what affect then the volume. And the indicator is just the representation of those three, the price, the volume. As an assistant, it tells you that it just made the resume. And we all know that assistant and secretary are very important. So that's it. That's why it is the golden cross. So the last thing that you need to know about the golden cross is that remember that Kijun in the Ishimoku house, Kijun is the big brother. He has 26 years old, and SSB is Papa Saba is 52 years old. Those are the strongest men in the house, and in the house, men are the strongest. physically. So when they cross each other, when the youngest, the young man, the young adult, tell it to his dad that, okay, daddy, it's time for the movement to go up. So for the volume to go up, let us go to the upside. His daddy take an about turn. If we're going to the downside like this, it takes a 150-degree turns, like 180-degree turns, changing his direction because he trusts Kijun. So that's the golden, because in the hierarchy of the Ishimoku family, the two strongest man are SSB and Kijun. Then comes SSA and Tenkyu, right? So that's why it's a golden cross for Ishimoku. So the mechanics that you need to know about, what is the mechanics? The mechanics is here. This is the mechanics. This news, volume, price indicator. That's the mechanics. That's the mechanics of trading. If you start with this, you will know that this cross is a golden cross. So we trade, the A+ setup trading plan is not just a trading plan to buy and sell. It's a mechanic plan where we follow the mechanics of the physical market. The real physical market impact the real digital market the same way. So we are just following the mechanics, and it's the mechanics that is the most important. There are people who don't understand that, but I'm telling you, this is the mechanics. So let us go then to Kijun and SSB. So, for example, this 15 minutes, right? We can make combination. Let us make a combination like this. We take this line, blue line. At this point, where was 5 minutes? Let us combine 15 minutes and 5 minutes. So we start with the mechanics. A plan must respect the mechanics of the real life. So you look at this. Look at where 5 minutes were. 5 minutes cross between Kijun and SSA at this point was at this level. So they were almost close to each other. See, when Kijun in 5 minutes just crossed like this at this point, Kijun and SSB just cross. See, when if you take a position till this point, you will see that Kijun will no more cross back below SSB. See how the Kijun is moving. At this level, it did not cross, it just bounced on SSB, then it keep going up due to the economic news. You can literally stay in your position. You see, due to the economic news, it keep moving up, keep moving up. This is a golden cross, better than the cross between Tenkan and Kijun. This one, I mean, SSB and Kijun are the golden cross because they are the two most strongest line of Ishimoku. It did not cross back. See, Kijun is still above. Kijun is still above SSB. Even here, it did not cross. You make as if it goes just right there. They went and crossed back. And see all of this. If that is not a mechanic that you need to look at, I don't know what you need to look at. This is the mechanic of what is happening. It just display what's happening in the chat. What's happening in the physical life, it just display it. It just show that for the moment, right, there is no sellers that has the point. Only buyers. The market is up, is an uptrend for sure. And what I want to tell you is that even in 15 minutes, for Kijun, see, even in 15 minutes, since the last course of Kijun, between Kijun and SSB here, till the top year there, Kijun did not touch back SSB. That gives you an opportunity to make a very long trade that can change your life forever. Give you 33 times the money that you invest. Even banks, when you place you make bank savings, right? In banks, I think the return in 1 year promise is between 1% and 6%. 1 and 6%, something like that. If you even have 3%, you will be so lucky on your bank savings. But that is why banks are not too much to grow money. No, that's not their work. Their work is to save it, security. If you want security, that you don't lose it, banks are very secure. So that's why we go to investing, right? In trading, something like that. In trading, so that we can multiply the money. That's why what we are doing. We go on trading to multiply the money. We go on trading to multiply the money. And it takes time for Kijun to cross back. That's what I wanted to say. See, when Kijun cross SSB, it takes times for Kijun to come again and cross SSB and touch SSB. It takes times. It takes long times. For example, this position lasted how many days? Almost 2 days, right? From year to year, it is one day and 33 hours. 2 days. So in 2 days, you take 30% of the invested money. If you invested like 100 francs if a year at this cross and you let the position go, you multiply it by 30, it will be 3 million in 2 days that we will be making. So if your account were something like, let us say 300K francs CFA, and then you decided to take 30% of your account to investment in 2 days, that's because you follow the mechanics. You follow the mechanics. So the way to do this is simply to wait this cross. You have this cross, you have this cross. Okay, let me put the two crosses, and then I will show you what to do. So the goal of this A plus setup trading plan is to, when you have this cross, right, this golden cross, what you need to do now is you can be taking position here. This SSA, right? This SSA setup in 5 minutes. This SSB setup in 5 minutes. You can be then taking all of these setups like this and increase position and add up position. So when the cross happen, you can be looking at those setups and then investing on those setups now. So your setup follow the mechanics of the real market. This one will be your first position. Then you scale up. This one will be your second position. Then you scale up. So this is already 2 position. This one will be your third position. Then you scale up to the end was at this point. The end was at this point. I will let all of those positions run up. So you'll be making this with this small stop loss. Let us put like this. 40% of your money. You know that when you invest here, you don't invest all of your capital. If this is all of your capital, you have 500K, 400K. You invest 100 francs CFA. Yeah, 100 francs CFA, 100 francs CFA. For the first one, I go and exit when the cost it really goes back below like this. You will be making, for the first one, you will be making 40 times 500K. I don't even want to start calculating those type of number. 40 times, right? And then this one, you will be making how much? 30 times. And then this one, 12 times. 40, 30, 12. So 40, 30, 12. That is almost, let me multiply by 100. 100. This one it will be 4 million because that's 100K. 4 million. This one will be 100K. 3 million francs CFA. This one will be 12 times 100. This one will be 1 million. 1,200,000. So we'll be making 8 millions. in 2 days by scaling up. Rather than just making, I just said 3 million at the beginning, right? You'll be making 8 million francs CFA. Because you enter based on the mechanics of the of the real market. You understand this, that the cross between Kijun and SSB is a mechanic cross. So if you are very good at mechanics, what prevents you to add a position like that and be placing 100,000 francs CFA each person? What prevents you? I'm just asking. Like you if you master, it's just like, because trading is simplicity. Trading is pure simplicity. The simplicity here is that the golden cross, and then you take setup that goes toward the golden cross. That's why I created this plan this way. Setup that goes toward the golden cross. Trading is a frequent simplicity. That's the simplicity. Even on that's now 15 minutes. See, 15 minutes. Those setups SSB on in 5 minutes will be 15-minute Kijun, 15-minute Kijun, 15-minute Kijun. This will be 15-minute Kijun. So you understand, right? Okay, let us look at one point, one very important point. This is the golden cross on 15 minutes. The golden timing. Yeah, golden cross, golden timing. Yeah. I'm calling it golden cross, yes. It's also a golden cross. I call it, yeah, golden timing, because this is the right moment to look at. You will realize that there is something that happened. Let me show you what may happen. Let us say that you wanted to sell for the downtrend, this downtrend here. That's happening now. A 50 minute. What is this thing? Why is my connection turning on that? So okay, went back. So look at, for example, 15 minute. Stop. Can you just give simply? Why are you turning like this? So look, for example, here. That's 5 minutes, right? 5 minute course below one time. And there are people who say, okay, we have a course, the golden timing here in 5 minutes. Let me sell. And then you come here, you sell. but you place your stop loss somewhere here, and then you get exited. And then you start saying that this thing doesn't work, this thing doesn't work, this golden timing doesn't work, it's not a good timing. The question that I want to ask to those type of people who are just looking at 10% flows on a 90% success in a timing is that if you are a car and then you climb up the hills like this at, let us say, at 200 kilometer per hour, when you when when you want to brake, are you braking the car when the car is going fast like this at 200 kilometer? When you brake, are you braking at 200 kilometer only one time to stop your car if you see an obstacle like this? If you see an obstacle, most of the time at 200 kilometer per hour, you brake 1, 2, and 3 times. It's the third time that the third time or the second time that your car will stop. So since 2 days, this market were going to the upside. Since today, this market we're going to the upside. We're going to the upside. This market we're going to the upside. Fastly. And then you want the market to stop and turn back like this, to do like going up, then going down at the same speed. No, arrive at the top, there will be the break. And when it breaks, it can break the first time just to stop, first of all of this impulse. And then it goes a little bit above, just above, but you don't pass up this level. You see Kijun, this Kijun now went above this one. And then it create again a second wave to the downside. From the second wave, you know that the uptrend has stopped, right? The uptrend has stopped because when he found, that's the second break, that was the first break to just stop this uptrend, break to the down, and then this is the second one. The second just played out very well. So from the second, you can be sure if the first one will be that's a shape that we call also double top, right? But I don't want to talk about double top. You will see that when Kijun do the golden timing the first time, Kijun go above again as if it is disrespecting you, but it will not go above the toppest Kijun. This is the toppest Kijun line. This top Kijun line will not be crossed. This is the toppest Kijun line. This is the other Kijun line. If you want to see clearly. So you can just have your confirmation if this point of Kijun above here has not been passed. When Kijun break for the first time to the downside, signaling that it is time for me to go down, and you see it makes as if it doesn't go down, it go up, and then rather than going up and passing this last point, this last high of it goes down now, you can just realize that, okay, this next time it did not even pass above the volume here. It means that you are now in a downtrend, and then you can be selling from this point all of these setups. You can just be selling these setups. So don't be like, it doesn't work here. You see, it doesn't work here. This thing work more than 75% probability, more than 75% probability to work, right? And then even in NBA, the greatest shooters are not that, and doesn't always make their basket when they shoot. The greatest shooter doesn't always make their basket. They sometimes make air ball. Everybody make air balls. So don't come and judge the market and Ishimoku saying that it doesn't work just because you don't understand the mechanics of the probability mechanics. What I'm showing you here is something that is happening in the real life. Even you start running like this. Start running like Usain Bolt, and then stop. When you arrive at the line, at the final line, stop just right here at the final line. Like you stop and then without an inch. Let me see how you do that. So you see a market that is running to the upside like this at almost 400 kilometers, like Concord. And then you want this market to just stop at in one time. That's not physically possible. Those are what those people who criticize those type of high probability strategy, things that humans are UFO or non-identified phenomenon area like UFO. Only UFO, you know that it is only the UFOs that can have, like, when it goes to the right, in 1 second it directly go to the upside by doing 90-degree turns, without even asking, right? But those financial markets are not governed, are not plotted by psychology of UFO. It is plotted by psychology of human. Human need to break one time, then second time, then third time before stopping their run. There's no human who is running at, let us say, 25-kilometer speed, and he can stop himself at with only one break. Impossible. You need to, even your in your mind, you will break one, two, second time, third time, because there is something that that we call the kinetic or the velocity, something like that. Kinetic move for physicians or engineers, they know it. The kinetic impulse. You cannot be, even you, if you are in a car that is running at 100 kilometers and you want to get out, you cannot be getting out and then stand on the road like this without moving, because you have the kinetic force is still in you. The kinetic force of the car is still in you. That's why you keep moving toward the front. You keep holding down on the road. The same thing for the digital market that just represent the real life market. See, for example, at this point, since Kijun went down at this level below SSB, when it arrived here, it went up, right, signaling that okay, the sales are finished. So, but it went up straight to the upside. Then it went below Kijun, below SSB again, but it not pass this bottom level, right? It not pass this level. It's still above that, showing that it is now time. It's at a certain time that it started moving to the upside. Even at this point, this one he made even more times. This one was an option. Then it went down first. Then it went to the upside. Then it went down the second time here. Then it went to the upside again. Then one time. It's the third time that took here. for this for this one, is the third time that took directly for a long downtrend. So understand that this market is run by humans, and human psychology doesn't turn in 90 degrees, doesn't make about turn in 1 second. When the same way it's going up, it will just go down, it will do like this straight movement. No. At a certain point, you can move to the upside, then make some pause, and then move to the upside, make some pause, then move to the upside, make some pause, and then go down, make some pause, go again up, and then start going down. That's how the humans have been created. So we okay. So you can then have goal combination like 5 minutes and 15 minutes, 15 minutes and 1 hour, 1 hour and 4 hours. So let us do for okay. Let us do for. I said that this one was 5 minutes. This one was 5 minutes, and then this one was 15 minutes. Just right there. And then let us do for 1 hour and 15 minutes. 1 hour and 15 minutes. You can arrive at a market when there is a combination between 15 minutes and one. This is 1 hour, 15 minutes. You will see that 1 hour was at this point for the up cross. This was at this point. You see that for 15 minutes, this was 15 minutes in blue. Yeah. So imagine that you are already in a position in 15 minutes like this, and then you see 1 hour, right? You see 1 hour cross above again. Rather than exiting the position like I'm afraid this one you will let it go. Because when Kijun crosses SSB, the black line, crosses the green line, it takes times for him to come back. Those are the strongest men. They carry weight. And see even here for this course of Kijun and SSB in 1 hour at this point. See what's happening here. What's happening here is literally let me show you. See, during this course, Kijun goes through upside down. And then see what SSB do. SSB is doing the curve. As I told you, this is the curve movement, right? Like a bucket. When you go to the river, for those who live in a bush like me, and then you go to the river and then to carry water, and then you have a small cup like a big cup like this. This bucket can be filled by two turn of the big cup. Then you pour water for the first time here, and then you pour water for the second time. Then you will fill your bucket. So if your bucket is just a plateau like this, you will not have any water to bring home, right? It's just a plateau like this, you don't have any water to bring home. That's why Kijun is doing a curve, making as if it's going to the downside, and then move to the upside. And you need this curve. You should be happy when you see Kijun going up and SSB is doing this curve. I wanted to say SSB is doing the curve. When SSB is doing the curve, going down while Kijun is going up, you should be happy and ready to invest a lot of money at the beginning of this curve, because that is when the real market movement will be happening, when you are close to this movement. Even he did it also here for this downtrend. Kijun went down and then SSB did the curve like this. SSB did the curve. Even here, Kijun went down and then SSB went up, then making the bucket like a cap covering that, okay, all of the cells will be going down. This is the cap. So that's how you can do it. And then you have the 4 hour. And then you have the 4 hour golden time, golden cross golden. Same thing between Kijun and SSB. The strongest line. For 4 hours started particularly here. This 4 hour. That's the 4 hour golden cross. Oh shit. I should not. Okay, this is the 4 hour golden cross just right here, right? So after 4 hour, this is the line of 4 hour. But 1 hour started since 1 hour started since before 4 hour got into. So if you are still in position and you see the 4 hour golden cross, you just stay in position, because this 1 hour that were in the back here, just in the back here. You see this, you stay in position. See, even in 4 hour, Kijun went to the upside like this. And then SSB did the bucket. Displaying you what? Displaying the intention of impulse of carrying water to high hills, to the upside. This is an Ishimoku phenomenon called the curve of SSD. When you arrive and you see SSB going down, Kijun going up, don't start being afraid. Say, oh, I don't know what is happening. Oh, why is it like that? Come on, G. Come on. Okay, so you have it, and then you can then combine. That's what that when you do market preparation, you prepare for this, for the golden timing. You prepare for this when you do market preparation. That's what the A plus setup is designed for you to do a good market preparation. So now, after that, all of this analysis below, the solid analysis to trade the golden timing, right? It's just for you to look at which setup that follows the golden timing that you have now. So, for example, we have all of the things that I explained to you in the beginning. I explained to you, for example, the trend, how to read the trend, right? You need to identify the golden timing. Then you add up this analysis, how to identify the trend. You have the actual trend, the inclination of the mouth of the cloud, and then you have the actual trend, the plateau of the mouth of the cloud, which is the direction of this plateau will just be the inverse of this last inclination. And then you have the Jeep trend. We did video on it. And then after that, you have the normal A plus setup. The normal A plus setup are the A plus setup that you know normally. Then kind of both. And then you have the bouncing, the SSB, the SSB, and the Tenkan. And then you have the number of times that you have to turnover. When I say turnover, that year I wanted to say reversal. Reversal, right? For the day on Tenkan, the good reversal is will be the five touch on the best reversal. So we did it. And then you have the potential of the trend, the potential of SSB. When there is a cross, you know that the potential is high as the fusion. It's very the level of strength of the trend now is very high. Fusion and and cross, even the skinny is high. And then when you start seeing snake, it's just the continuity, right? You are currently on it. And then you start getting weak on the python and then on the fat. And then the dunk is just the reversal. When people who are obese cannot climb the mountain, when I call about obese, it's like you have 7 times your normal weight. If your height is 1 meter and 75 centimeter, and normally you need to have a 73 kilogram weight or 68 kilogram weight. You multiply your 70 kilogram weight, normal kilogram weight by 7, and you are obese. And then they tell you to climb the Mount Everest or a big mountain. You will be able? No. You need to be skinny first to have more energy, to have more ability to climb it. Right? That's why those who do climbing are very skinny most of the time. And then you also have the same thing with Tenkan and Kijun. The TK course is the very good moment for the high probability trend to the upside, even the fusion, even the skinny. And then the snakes is also a continuity type of angular shape. See the angulation of the mouth of the TK. And then you have also the python when it starts becoming weak, and the fat obese Kobe, that when it starts becoming a reversal. And then you have the dunk or the reversal cell. Then after that, you then have reverse A plus setups on difficult market. You have the inverse Kijun. The inverse Kijun is that the price were going down, and now we are starting making the uptrend. You have a reverse Kijun like this. The candle will make as if it close below Kijun to go down, but the Tenkan will stay above Kijun. You think that no, it's a sell. Let me sell. Those amateurs who sell there, that's when they start complaining that Ishimoku doesn't work. Ishimoku work, my G. This is just a reverse Kijun. So the inverted Kijun A plus setup is just a reversal. The inverted Tenkan, when Tenkan is between SSA and Kijun, and then it makes assist, they kind of break above Tenkan. And then you think that you are buying. When you think that you are buying, that's when you are actually selling, because the cloud is red and then it was just a continuity of the sell. That's the embedded Tenkan. And then you have the embedded SSB. The embedded SSB is one of the tricky things. When it's happening in 4 hour, 1 hour, it can give you in 1 minute, one long down trend. It's like let me look at if I can see an inverted Kijun. Sorry. So for example, this one is an inverted Kijun. Inverted Kijun is that, right? Normally, the normal Kijun is this. The candle are going up and then it come and touch here. and then it continue to the upside, right? But if it doesn't continue to the upside and then it starts going down, this touch inside the cloud like this is the inverted Kijun. Like when I say it came there and did the SSB, right? But went up. When it is going up, it stopped right inside the Tenkan setup. That is also the inverted Kijun because it is that's also the inverted SSB. Sorry, I didn't want to say Kijun. This is the inverted SSB. This is also the inverted SSB because normally you must touch SSB on a blank space. Now it is touching SSB inside the green cloud, making as if it will go up, but it stops right there and then continue down, continue down, run down. This is what this is it here. It didn't make like this one. There's another, it didn't make like this one. See, for example, at this point in time, when the candle went below Kijun at this level, and then it went above, did this candle stop here and then started making downtrend like this? No. When it went above, it keep going to the upside. So, but on the price on the right there, it stopped right there and then started going to the downside. That's the embedded SSB. It happens sometimes, but need to be ready. You can confirm it with higher time frame confirmation. And then you have the inverted SSA for continuity. Inverted SSB is for continuity to the downside. So you know what will make you continue or or reverse. So I place it here, continuity reversal. That's what every trader wants to know. And then you have the Stochtel Ishimoku phenomenon. You have the Eke. The Eke is like an UFO airplane, something like that. That make you think that Tenkan is making you think that I'm going to the downside like this. But actually, it will come and do an inverted Tenkan number 2 and go up. This thing often happen during economic news. The news is high like this, bending Tenkan to the downside, but Kijun will stay flat. Kijun will not follow. When you see Kijun not following, means that that's an UFO type of move that will bring you an inverted Tenkan. That's an AK, and then it will go to the upside. Just be ready that it's also because that in one day or 4 hours there is a blockage like an SSA set up there. Okay. And then after that, you have the curve of June for reversal. You know this one. This one is a bucket of water that you want to carry. This one is also accompanied by an inverted Kijun setup, kind of making you think that I'm breaking Kijun to the downside for the sell, but actually it is just a reversal to the upside. You can have higher time frame confirmation. Also, when the ticket cost is is larger. Then you have the Fufu stare. Fufu stare is the end of the correction. You know that this cloud, red cloud, will not come and touch the cloud here below if it is still an uptrend. So when the candle come and touch the previous cloud, red cloud, it is the right time to buy and go to the upside. Even at this level, the candle touch the top of the previous cloud, the previous red cloud, you buy and go to the cheapest cloud will be the candle that touch the top of this cloud, and then you buy. So that's for you to prepare in difficult market that you struggle to read. Then you have the when TK will continue to the upside. First of all, the Tenkan and Kijun must be up above the cloud or above SSA. So even if Tenkan is inside the cloud like this, Tenkan and Kijun are still above SSA. And then the candle must be out of the above Kijun. Because when we are going to the upside and then this one is just a correction, we touch the setup SSB and then we go up. If you want to confirm that we keep moving up, the candle must be above Kijun. When the one candle is above Kijun, it's a sign that we want to continue. We just make an SSA setup and then we continue to the upside. Okay, and then we have we did all of this in previous video. I'm just repeating all what we did. And then we have the Ishimoku magnet. We know that SSA is directing the price, orienting it, directing the price to a direction. This is the debut, the starting point when the candle touch SSA and the future SSA, you know that the cloud is advanced by 26 candle in front. This cloud will be already printed. You know that the inclination to the upside of SSA like that will give you an opportunity to buy. And then same thing for SSB. SSB also direct the price like SSA, oriented. And then the future choose attract the price toward him. Attract the price toward him. If you have a future choose in front like that, you rather attract the price toward him, or we stop the price to keep moving higher with a high speed to the upside. Will just make him slow a little bit. Then after the Tuesday, you can go to the upside. And then you have the scissor. The scissor is the fact that SSA orient first of all the price to the upside. You see the candle went to the direction of SSA. Then SSB has an inclination to the downside here, orient to the downside. And the chance is that for this scissor, sometimes there is a setup SSB here above, and then it chooses that attract multiple type of signs for the candle to go down. And then you have the 1 minute entry. The 1 minute entry is that you can place your stop loss at the furthest line below. First of all, we enter in 1 minute, and then the stop loss, we put the stop loss. When you enter in 1 minute, you have any type of position. Let us say that you enter, you buy just right there. When you buy here, the furthest line is this Tenkan line. You place your stop loss at this point, at the furthest line below. This is what I did here. This is the furthest line. Your stop loss can be there, right? And then you have the entry. Rather you use Gyosho that in 1 minute. I said that is 1 minute. All of this is 1 minute. Those entry and stop loss. Rather you use Gyosho that in 1 minute or the A plus setup entry. When I say A plus setup entry is that, let us say you have a setup in a setup like this in 5 minutes. This setup 5 minutes, when you go in 1 minute, A plus setup 5 minutes is that when you go, what I talk about when I mean 5 minute A plus setup entry is that you don't enter in 5 minutes. You just look at the setup in 5 minutes. You are in this black box, right? You say that the mainstream entry is that when they teach us that when the candle break below Kijun, like this Kijun, when this red candle break below Kijun, you sell. But you can actually decide to enter inside this black box like this and sell there and just place inside this black box. Why? Because you see, when the candle were going up here, arrive at the inside the black box, you see small candles like dojis, hammer, dojis, and those are uncertain candles that are happening inside the black box, showing that the candles are cars. When small car appear inside the black box, it is in 1 minute. It is showing you that the price doesn't want to move higher than those small cars, and then you can just sell right there, rather than waiting to sell just at the bottom here. You can sell inside the black box. That's what I said. 5 minute setup entry. You can enter based on setup or based on Gyosho Ozuda. Gyosho Ozuda said that first of all, the first criteria to enter that you know that the trade will start going to the upside is that TK cross must happen. Then the Shiku must be above the candles, and then Kijun must be above the TK cross line level, and then the fourth is that SSA must be above SSB, and then the candle must be outside. That's what would be the confirmed entry in 1 minute. This one is 1 minute. This one is 1 minute, using the black box of 5 minutes, and then 1 minute for stop loss. Then how do you hold the position? I told you hold the position based on, you stay in position based on if you go in 5 minutes. Since if 5 minutes SSA and SSB did not cross back, since SSA and SSB are still separated here, it is only now that you have a serious cross. You could have sold here, right? If you sold here and you see that 5 minutes, you sold here in 1 minute, you see that 5 minutes SSB and SSA as a cost here, just at this level. The first time when you go out exit is at this point, at the point where there is the first cost. This is the cost back of SSA and SSB in 5 minutes. But you are not forced to exit at this level, right? You are not forced to exit at this level, because if you look at 15 minutes, where you sold there, at this point, at this point, right, the cloud in 15 minutes is also now separated. So you can just remain in position because 15 minutes is actually converging in your direction. You can still stay in position till now down. So rather than only exiting your position at a risk reward of 4, you will be exiting your position. You'll be staying in position 10 times your money. That's how you make advantage of of position. That's what we are called holding position if Tenkan and Kijun are still separated. It's the same thing for Tenkan and Kijun. When you are at this level, Tenkan and Kijun in 15 minutes is still separated, so don't exit the position just because you see red candle or opposite candle. So after that, you have the take profit. The take profit is exactly it. When you see a cross back, you can take profit. When you Tenkan and Kijun or SSR and SSB, you can take profit. But the holding position will tell you if you take profit or you leave. And then when you you can also take profit at a high. You enter just right there, and then the next Tenkan looking left, you can take profit. If you feel like you will reverse at this level, if you see mechanically that you cannot reverse a level. And then the SSB plateau is also a take profit. Those are all just A plus setup. It can also be Kijun. You sell just above here and then you exit here. That's a take profit. Or you can just decide to let it run. You exit inside at the bottom there. And then the take profit looking at the left twist. This is the take profit. That's all on the plan. So the rule for economic news, as I told you, if you don't have 10 minutes a day when you don't trade, I don't know what you are doing in trading. You need to know that during 5 minutes before the economic news, you should not enter a position. And then if you are already in position, place a stop loss, break even, withdraw 80% of your money, and then leave 20% in progress. 80% of your gains. Of your profit, and leave 20% in the trade. And then 3 minutes after the new economic news, I said that don't come 1, 2, 3 with your finger. 3 minutes after, do again a clear setup analysis and then enter in a clear setup. Don't enter based on minute that you come with your finger. And then these are the high impact news. I want to remember you that these high impact news, right, are 3 stars news that I took from the economic calendar. This economic calendar, all of them are I took the highest impact news. Then inside the highest impact news, I then filter it, separated it, classified them, segmented them into 3. Very high impact, 3-star very high impact, 3-star medium impact, 3-star low impact, right? The very high impact, when you see it during a week, during a week like this one, in a whole week, you will see all of this or one of these. You need to know that the market will move in one direction because these are the highest impact news. And then you have the medium impact news just right here. Just read it. You just read the names here, and then you go in your calendar to check if you have them. And then you have the low impact news. But all of them are 3 stars, like inside the high impact, the top impact news, economic news. Those are the classification of the top impact. Like, for example, the best player in the world now in football, you can then classify them. You classify the best between the best players. So now let us talk about risk management. So if you start with an account of $10, between $10 and $100, which is $10 is 5,000 francs, and $100 is 60,000. You have a micro capital. That's the starter capital, micro capital. Then the entry level, like mini capital, are those who have $100 and $500 who start with $100 and $500. And then $100 is roughly 60,000 francs CFA, and $500 is roughly 300,000 francs CFA. And then the small cap, those who have a small capital, I mean, those traders will start their own account. It is between $500 and $1,000. This is roughly 300,000 francs CFA and 600,000 francs CFA. Then active investor, those who have between $1,000 and $2,000, this is roughly 600,000 francs CFA and 1,200,000 francs CFA. And then the serious investors capital, those who have big capital now to start with, is between 1,200,000 francs CFA and 3 million, right? So now the thing is that risk management is about how much money you risk in one trade. There is a saying that says risk 1% or 2% per trade to secure your account. But let me tell you something. I don't like conversation about this risk management. Because, right, there are people, even with this 1% per trade, he came here, he sold at this level. I'm doing risk management. My stop loss is 1%. He got exited. And then he came again here below. I sold 1%. He just exited. And he made it like 100 times. And he burned his account down. But he respected the risk management of 1 or 2%, right? From his $10. $1 per position, $1 per position. After 10 positions, you are out of the market. You cannot even trade anymore. So I don't like the conversation about risk per trade machine. No, that's not something that the most valuable conversation is not about how much money you risk. The most conversation is about what is the quality of your setup, of your timing and your setup. What is the quality of your timing and your setup? That is the most important conversation in the industry. Those who have conversation 1%, 2%, there are people who are like, oh, I'm a 1% guy. I was 0.25% guy. It's not about the percentage. Trading is a machine that multiplies money. Let us say that you know how to read the chart. You know how to read the chart like this, right? And then you know that this is the place where you need to sell at this level. What prevents you to put 50% of your money here? You have a $10 account. 50% is $5. So you have 5,000 francs CFA. You put 2,500 francs CFA in this position. This position multiply this 2,000 by 7. 2,000 by 7. 2,000 by 7 is how much? Except for the 14. You have now 14,000 francs CFA. That's when you put 50% of your account, right? Imagine that you put, instead, you have a $10 account, like 5,000. You put instead 1%. This will be 600 francs CFA. And then you multiply by 7. 6 multiplied by 7 is how much? I don't know 6 multiplied by 7. Equal to well, right now, my boy. It's not school. It's not school. You're not in school here. You have software. 6 multiplied by 7. If it was money directly, I couldn't. Okay. G will be 4,200. Right? 4,242. Compared to 4,000 compared to 14,000, even you see, in terms of you growing a small account. In terms of you growing a small account, it's not about 1%, 2%, no 50%, 25%. It's about your goals. That's why I put here the goals. What is your goal? If you want to just see how trading works, you have $10 account. You start with $10, and then you can be risking 1%, 2% for the beginning. But now, if your goal is to be a serious investor, you need to be a serious investor fast. And when I say a serious investor fast, rapidly, it's not about the percentage of money. No, those who are serious investors, it's not about the percentage of their risk. It's about the quality of their A+ setups. Because if you have a good type of, the mainstream say that the good type of risk is between 1% and 5% of your account, right? That's the mainstream. Most of the people say that. But it's not about the good risk management. It's about the quality of the setup. Because no matter the quality of the setup, if the quality is always high, you can multiply any type of risk. That's why I don't like this conversation about putting 1%, 2%. It's about having a goal to achieve. Your number one first goal must to master A+ setup and be ready to apply A+ setup, no matter the capital that you risk. That's why you see that this A+ setup trading plan that I proposed to you is organized like this. You know that in the real life market, everybody make money. In the physical market, everybody make money rather by buying or by selling. To make money in the market, right? To make money in economics, rather you buy or you sell. You buy what or you sell what? A product, right? That's what we do in marketing. That's what we do anywhere. There's no business in this world that doesn't buy or sell product or services. That's where the money comes. When you buy and sell product, that's where the money comes. So in trading now, what is the product? The product or the service is now A+ setup that you buy. You are not buying a currency or something. You are buying and selling A+ setup. That's what gives you money. Those things, those pairs that you see on the left, on the right here, are not like those are not products that you are buying in the trading or services. Those are just like those are just country. Do I sell my car in United States or in Japan? Do I sell my car in Cameroon or in Ivory Coast? Do I sell my car in South Africa or in France? Those are pairs. Those are trading pairs or asset. But the only product that you sell is a car, and this car is the A+ setup. Or product that you buy is A+ setup. That's the only thing. That's why you need to be inside the right timing to sell. This right timing that I show you. When you are at the right timing, you can be selling them. They can set up like this. That's what you sell. You are not selling asset, Bitcoin, gold. No. In trading, you are not doing that. You are not buying and selling gold. No. You are buying and selling A+ setup, because trading is also a business. And the product of trading is A+ setup. Somebody who didn't tell you that, it means that you don't yet know. A+ setup is the product you buy and sell. So if you are in trading and you don't know your product, where you will be making money, each company make money out of products. You know that there are irresistible product, right? An irresistible offer. In trading, the irresistible product is the A+ setup. The irresistible offer is the timing, the greatest timing that I showed you at the beginning of the trading plan. So the trading plan is organized. This A+ setup trading plan is organized like this. This is the plan, right? This is the plan, right? The first part here, we have the offer. The offer, the irresistible offer, which is in trading what? The cross between Kijun and SSB, right? And then you have the product. You offer something, then you show the product. Then you have the product. This is the product. This is how the product is all of the A+ setup that I show you, right? All of the A+ setup that I show you. And then at the end of this trading plan, you will see the KPI. The KPI in the real life marketing is like net profit, right? Net profit, net benefits. The benefits, the profit. You see also the profit here. This is the trading plan. A+ setup trading plan that I show you. A+ setup trading plan. that I show you. You also see your profitability inside at the end of the plan. So this is the organization of this trading plan that I'm showing you. This is the any company, Amazon, Apple, who have those iPhone, Amazon who have all of these products and services and delivery services. This is any company in the physical world. This is now you as a trader. This is your trading business. When you open a trading business, this is your plan. You plan to sell this product and having this great offer. Your great offer is just the right timing so that you don't hit stop loss. And then you just check your profitability at the end. This is the plan. This is how we make the plan. So at this level, talking about this risk per trade. Who told you? There are people, when I say that I don't like conversation about risk per trade, there are people who like to buy luxury product, right? There are luxury product like Louis Vuitton, Bugatti, mansion houses, Rolex watches. And you think that those luxury products, you invest there like 1% of your money. Those are like 50% of your money, of your battery, of your things or something. Those are high what? How do they call it? High margin product. No, not high margin product. Expensive product. So in trading is a place where you can be putting your capital a lot, like 50% of your capital, and then you multiply it. The fear doesn't come from 50% of the capital. The fear comes from not knowing the A+ setup of the timing. The fears of traders who struggle to reach 50% of their money in a position doesn't come from the 50%. That's the myth. That's a false bias. It's not 50%. I know that not everybody can afford buying expensive product to make a living. Not everybody. But in trading, it's possible when you all actually have the timing and the A+ setup. Those two, the offer and the great product, the best product, the irresistible. When you have those two, why are you not buying it expensively or selling it expensively? Why are you making like 1%? You want to grow a $10 account. Let us say a $10 account. So nobody can make a life with $10. It's starting from even here, for active investor that you can make a life. Why don't you grow your account faster so that you can reach a serious investor capital and be a serious investor? When you reach this serious investor capital, then you can then start risking less than 25%, but keep taking A+ setup product, A+ setup type of trade. The conversation is not about how much you risk, it's about what's the quality of the setup. That's why when I talk with other traders, I don't have any conversation about how much you risk. Those are bullshit. Because even if you risk 0.1% of your account each time, you burn that account. Many of us did it. You risk 0.1% and your account finish getting dry. It's not about then the percentage, it's about you not entering at the setups, not respecting the setups. So the conversation must be in the product and the offer rather than using the word like, is it expensive, cheap or expensive? No, this is mindset of broken mindset. So if you want to grow a small account, you need to have a great high risk per trade till you reach the serious investor capital. And you have the opportunity to have it because when you are in a great timing like this, you can leave your $10, your 50% of your $10 grow like 7 times. I told you that, right? And then in less than 1 day, you will be having more money to invest for the next day, then the next day, then the next day, then the next week. Rather than putting 1% in $10 account, my brother, my sister, what's up? What up? Are you selling granite? If you want to sell granite in the market, go back in the granite industry. This one is a financial industry. Go back in the granite industry and start selling your granite at 1%. Right? So the conversation is not about how much you risk. You risk depending on your goal. If your goal is just to see how trading works, keep putting 1%, 2%. But let me tell you, if you do all of your effort to analyze the price and you realize that at this level the price will start going up, and then you have put only $1 in this position, and this $1 position rise up to, so you stay in front of your screen for 2 days to see $1 grow till it become $24. You will be so mad. You'll be so mad that all of this effort, if you were put instead of $1 but $100, you will have $2,400 here, which is 100, roughly 1 million. Just because you had a $1 mindset, let me put $1 in a position, let me put $1, you make the effort that you put in place to actually make this $1 multiply, right? The effort that you put in place, right, compared to the reward in this, compared to the reward, will make you so pissed off that all of this work that I did, this analysis is just to have $24 at the end. It cannot even pay my light bill. Just to have $24 at the end. It cannot even pay my light bill. And then you will be so mad at your own self that during a good market like that, why am I struggling to multiply my money and save my ass from the rat race and the brokenness? You'll be so mad. So even this 1% is just, those are just things that get people mad also. Because this 1% is also based on fear. Fear, those who don't know how to read the market. But with this A+ setup, I gave you the timing and the A+ setup. I gave you the timing and the A+ setup. This is the timing and the A+ setup. You respect the timing, you address the A+ setup, and then you are done. This is the simplicity. This is the simplicity of trading. This is the simplicity of trading. This is the trading plan in 3 steps. Timing, timing, A+ setup, and then you just check your profitability in 3 steps. Okay, now let us look at key performance indexes. Index KPI. Key performance index are how much money did you make after your expenses. So so the expenses now, the key performance index, the only things that you need to check is only the purple box, the profitability, the return on investment. Every investor, trading is an investor platform. It's not like buy product and sell product. Invest in worldwide products, right? So profitability is only the return on investment. It must be greater than 100%. Let us say that you made expenses, right? In a YouTube video, when I said, am I already profitable in my channel? I'm explaining my journey. I started 1 year and 10 months ago in March 2023, right? And then I bought a training course that had a positive result on me. Like, was well framed, supporting. They were all answering all of my questions. I bought it for $1,000. And then in September 2024, and then I invested in signals, but that was not useful because some signals were so bullshit. Look at one signal, one of the signals that I invested in. Somebody is saying that it will sell here, right? Somebody is saying that it will sell here, and the stop loss is like this. The stop loss is 3 times his take profit because they were using planned take profit and pre-ready setups, pre-ready stop loss. See a position, a sell position of somebody. That is bullshit. Because you know that your stop loss must be like this. So that you have a risk reward of 3. You cannot be investing and losing money and risking to lose money. When you invest, you risk to earn money, not to lose money. This is how their stop loss were. 3 times bigger than their take profit. Those signals. Then I fall down on bad signals. I know that they are good trading signals, right? But I fall down on bad signals. I said that I will never use signals again. I will just use my head. So that was not useful. Some signals were slow. You wait signals every day, then instead of having it every day, you have it 1 time a month, 1 time a week. I said, you guys go away with it. I don't want those bullshit again. And then now Profirm, I invested in Profirm, $345, a 50K account, a 10K account, 3 10K account. I passed phase one of 1 10K account. I was so happy. But the reason why I lost other one is that when I passed this phase 1 challenge, it was a huge impact for me. Like I started barking at house even for 15 minutes, like a madman, thinking about all my haters that I will show you guys. I'm now back in my financial life. And then I failed the phase two. The thing is that I traded during a good market, and I were not ready on bad market. In phase two, the market was actually bad. I traded euro dollar, and then I lost all of this one. I was not ready. When I started feeling like that, I said, okay, let me go again and work bad market. I did not know all of these things that I know now, yeah, about Ishimoku that I explained to you. Then I went and did my research, and then I created then this analysis that I'm showing you. This analysis that I'm showing you is also for me because um, it's, those are days of my reflection of my experience during after all of these losses when I put myself in questions. What am I doing wrong? How am I? Why am I reading the market in the wrong way? So what's happening now is that those analyses permit me to adapt my understanding and feel ready to make profit. Now I feel so ready to make profit after all of these losses. I feel ready because I've analyzed the market. I slept on chart. I was even dreaming on the chart as if I dream about my girlfriend. So these are all my expenses. Internet money, 400 since March 2003. So I invested in training, seniors, profile, and internet. All right. I have positive result and negative result. So during that time, now we are not. It was the 2 December 2024, right? When I made this box of the resume. So to calculate my profitability, my expenses were not actually yet. My expenses were 1,800,000 francs CFA, which is $2,800, right? So I did not withdraw any gain at that time. I do not have any positive result like gains withdrawal. At that time, I was zero. So my return on investment was zero. So I was not profitable. When your return on investment is zero a year like this, you are not profitable, right? Let me start like this. You are not profitable. That's why you see expenses times withdrawal gains. Expenses are higher than that. So my return on investment, if I start gaining money, 1,500 like this, when I start getting 1,500,000 dollar, $500, $1,500, it's not because you have withdrawal gains that you are profitable. Profitability is not about withdrawal gains. Profitability is like you put you divide the gain that you withdraw divided by the expenses that you made, right? So even at 1,500, somebody is not profitable. So it's only when you reach, you see that the return on investment is 52%. It's only when you reach 100% that you start the starting of the profitability when you have 2,870 $2,870. You have make your money back, all of your expenses on the trading, the trading costs, the signal, the profit, the internet connection. I did not put the money that I eat, my rent. No, because anyway I will eat, anyway I will rent, anyway I will buy soap to wash myself. Anyway I will buy clothes. I put only money invested for trading. So at that time I were not all actually profitable for that moment. So when I get this money, then I'm at break even 100% of return on investment. So it's now when you have when you have like $3,000 money withdrawal, that you have 4%, 4.5% return on investment. Your profitability is then of 4.5% because it's all of the number that's above 100. That is your profitability. So if you have like $10,000 here, withdraw, you have a profitability of 248% profitability. So the return on investment is the profitability. It's the only key metrics that you need to measure. So now you can have like this, let us say 3,000 withdrawal gains, right? your profitability will be 4% profitable, 4% by profitable by 4% profitability, right? And then, but there's also another thing that is called platform gains. What are called platform gains are money that you have inside the platform for your capital, your trading capital, and unrealized gain. What's unrealized gain? Unrealized gain is like you are in this position, right? You see that based on the exit, you cannot exit this position yet, right? Because Tenkan and Kijun are not yet crossed back. SSB and SSA are not yet crossed back. You cannot exit this position yet, right? You are still in position. So, and maybe it is $100 that is blocked here in position, right? That $100 is already 5 times. So that around $100 is already plus $500. This $500 is unrealized gain. This is what you are gaining now in this position. If you don't close the position, you are not yet realized. That's unrealized. You are unrealized gain. When you exit this position, you realize the gains, right? So this money is actually unrealized. So profitability don't take into account your trading capital that you are investing with, like this $100 is your capital inside the platform. Your unrealized gain, no, you don't count profitability with that. And then your realized gain, even the money that is still inside the platform, because if the money is still inside the platform, they are still using it for the business. So you only count profitability for money that you have withdrawn out of the platform, right? Even if you make gain inside the platform, you use it to increase it again. But that will not be profitability. That will be just to grow capital more, right? You only withdraw the quantity that you want to be solving daily life issue, right? That's what I call profitability. That's the return on investment. What return is what you can see with your hand that you have withdraw. If the platform make you problem and then don't give you back your money, or something happen in the financial market, and then you cannot realize, you cannot withdraw this money, it means that you cannot count it as a profit for you. It's a money locked. But most platforms have your money and it can give you it back, right? Most platforms are regulated. So, but we don't count the platform money. The platform money is basically your capital you have to grow there. So you only count profitability based on what you have withdrawn from the market. That's how you know that you are a profitable trader. For sure. And then other metrics on the right here. Other metrics on the right here are like profit per trade, win rate. Win rate is number of trade won. Like if you have 40 trade won and 20 trade 20 trade lost, 40 trade won and 20 trade lost, your win rate can be 100%, which is actually difficult to make at this level. So even with a win rate of 30% is good. You can be profitable. And your profit factor is something that you divide by 4. Is a not that you divide by 4. Above 2, a profit factor above 2 is like having 50% profit compared to losses. And then another key matrix. There are more metrics than all of these metrics, but the most important one that you must watch is your best trade gains. How much in one trade? How much do you gain? $100. So the reason why you want to watch your best trade, right? Is that right? Since those are key performance index, you want to be like, I want to beat my best trade. If my best trade was this one, I sold here, and then at this level I made $100, right? My next trade, I want that I made my best trade in one trade, I gain $100. My next trade, when I will sell here, I want to reach $200. This is my goal. So it can push you to hold better a trade rather than exiting too soon. To hold more, to keep holding, rather than fearing head candles. You can be having goals like, I want to beat my next level, because trading is a personal journey where you compete with your own self. You are not competing with anyone in trading apart from yourself. So you compete with also you are realizing now you want that your best trade should be $300, and then you want a best trade of $500. Those will be your goal. You'll be changing. You put the most amount of money that you had on one trade, and then your average gain per trade, right? Your average gain per trade, so that you can see average. Like the average gain per trade can be $50, right? It means that if you are in a position and then this trade has not yet reached $50, $50, you stay in position, because averagely you can go more than $50. That's how you track your metrics. And then your worst trades. Worst trade is that your worst trade is how much. If, for example, in this position, you lost, if, for example, in this position, you enter a trade and you lost $30, your goal is that the next trade that you placed, you lost $30 here, right? You have minus $30. Your goal is that in your next trade, you should not have a trade that you lose worse than this. If you feel like it is not the right timing, exit at even $24, rather than have big losses, right? Exit at $25, because from statistics, when you reach $30, it means that you are wrong in terms of timing. You are wrong in the direction and in terms of timing. So you need to exit. So that's how you track your making and your average loss. So if you actually you are already at $12 in unrealized loss, right? In losses, start worrying about maybe you should exit your position at $12 rather than letting your losses run. Because the less you let your losses run, the more you are profitable. If you don't have losses that are running too often, you are more profitable than somebody who just let their stop loss get hit, because you cut your loss earlier and then you will be more profitable, right? So those are the metrics. And then rather than computing, I wanted to give you a journal, a trading journal, so that you can, when you trade, actually plot it, you plot it manually. I said, I don't want it for you to look like a wall. And then I found this platform that have trading journal, automatic trading journal. When you trade, you log in your, you see trading journal here. This is one is a French something. Also I have the English version. Let me put in the English version. The English version. Fixed Trade. Fixed Trade is one of the platforms that has a trading journal, statistical to trading score, trading tags, where each trade that you put, it gives you all of this data and more data than this one. But these are the number one data that's the most important that you even record it manually is the profitability. The profitability is not the platform, this platform that you that give you your profitability. It's you, because you know how much expenses that you place, you invested in trading. That's the manual. The platform doesn't have all of my these expenses, because I did not trade necessarily all of this capital. I bought a trading course. I bought internet. Those are not in the platform. So your profitability is you record. You take this my table, right? You could come and fill it. You will see your profitability here on the right. So, but for the left metric like profit per trade, I have two platforms that give that measure it automatically for you. You have the first one. This is Fixed Trade. That is the leading trading analytic platform. The best traders use Fixed Trade to measure. You see, to measure what and understand what their growth in trading revenue. That's what I'm talking about. That's what I was talking about to you. So if you are the only one trading platform that you track your analysis and reach your trading goals, you see, these are your trading goals. Your trading goals depend on, I want to beat my best trade. I want to have lesser trade, worse trade than my highest worst trade. So it computes all of your your trade automatically. It's optimize your tracking system. It is tracking your trade, right? For example, those are the statistics that you show. The profit, the most important thing, the profit that you have in this platform, the average profit, the pips, the gains, the win percentage, number of trades that you win divided by number of trades that you lost, 80%. The profit factor over 4, your worst loss and your average loss, your best gain and your average gain. Those are the most important metrics. And after that, you have more metrics that they display in terms of for transaction metrics, deposit, withdrawal, note, comment, manual, automated, profit chart. So you can try it for free, right? And then I have the second one. That is my FX book. tracking. I have for this guy. I don't know this guy. This guy. So I just look at my Facebook because I also have this one. So for example, this one displays this it displayed these gains, and then you can see profit. Oh, this is profit $44,000. This is the deposit. This platform computes automatically from your broker. It's locking it lock from your broker. The money that you withdraw in terms of withdrawal gains, right? $100,000, right? The last update in 2020, right? So this one is tracking. So you can have the same tracking like this, the equity, and then all of those type of this is the profitability, right? You have a profitability of 65%, 65% profitability, and you can still withdraw gains. So this is an example. This is an example. I think this is an example like a bot. So you can log in on those two platforms. Go look at YouTube how to log in. It's very easy. So those are how then your trading plan that you'll be using to make money out of the market, out of the market. You can actually use it like this. Okay. So with that said, I will tell you good trading journey.